Competitive rates are a little bit challenging depending on your situation. It's all relative. If you are a net debtor as a corporation and you have a high interest rate on your working capital line of credit, a lower CD rate may not make any sense. You might want to pay off that line of credit. But if you are a cash heavy business, government, nonprofit, something along those lines where your money is sort of always in flux and you don't have a lot of longer term dollars, the cash rate might be the most important. Short term CD rates might be the most important. And so those are going to be pegged on whatever your other options might be. If you're a government and you have limited options by state statutes, then we're looking at Treasury bills and the safest fixed income investments as sort of your benchmark. And as I said previously, your rate should really be above that. And if it's not, then you can just shift to those securities that are paying better. If you have some other instrument that's outstanding that is costing you money, investing in CDs may not be the right fit. So there's again that balance of when is cash coming in, when is cash going out, how long will that be, and what other pieces of the puzzle are there. If you have an asset heavy business, that's very different than if you are a nonprofit that's running off donations and providing services. Competitive rates though on CDs, until you get to very, very large dollar amounts, you should be earning more than the Treasury rates for a similar tenor. And that's sort of a basic benchmark that we can use. And depending on the market, you may be looking at 20, 30, 40, 50 basis points more than those equivalent Treasuries. In a tighter market, it may just be 5 or 10 or 20. And so it does fluctuate, but the Treasury market is very liquid. It's very active. It's very responsive to news in the market. And so you are getting a live feed on what people think rates should be. So the spread changes, but that's a very good benchmark of an extremely safe and super liquid investment that has a specific term.